Hey everyone, just a quick note about today's show. It was recorded live at 4:30 p.m. Eastern on Monday, approximately 90 minutes before President Trump announced a ceasefire between Israel and Iran. That's why it is not addressed in this recording. As of Tuesday evening, the cessation of hostilities appears to be holding, but it remains a fluid situation. And now, on to the show.
The president is tweeting at the Fed president, the chairman of the Federal Reserve. I think it's asinine. I don't think you should be tweeting at him. You're shoving him, and he's trying to help you and trying to help the flow of capital into the United States by having some level of political independence. And Trump shoving him is not helping the situation. It's probably, if anything, I think the rates could go down. And I think Trump has actually slowed that process with his nonsensical, asinine behavior.
Yeah, he's calling him a moron, saying he doesn't understand things. It might be like, if that was me, it might push me the other direction.
Oh, not you. How about if it's Jerome Powell? Jerome Powell's giving him the bird right now.
Yeah.
You know that, and I know that.
Hi, everyone. Welcome to Bits and Bips, exploring how crypto and macro collide one basis point at a time. Today, we're going to talk about U.S. and Iran and Israel. Just first, I want to say, obviously, our hearts go out to anyone directly impacted in these situations. And when we're talking about this today, we're going to focus mostly on, the financial and geopolitical impacts and not to dissuade or anything like that. That's just what we can do here. And obviously, none of us are particular geopolitical experts, but we can try to talk about how we think it is impacting markets. We're going to get into a bit about the Fed, macro topics. We're going to talk a little bit about stablecoins. And then we'll get into the ETFs coming to the U.S. markets, when I think it's going to happen and what I think will get approved. But first, some quick intros. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg's End. Also joined by Alex Kruger, Kruger Macro of House Asgard, Protector of the Realm. And Noelle Acheson, High Seer and Keeper of the Crypto is Macro Now newsletter.
Hi, everyone.
Today, we're also joined by Anthony Scaramucci, the Baron of Skybridge House. He doesn't really need any introduction himself, but for those that don't know who he is, we'll let him intro himself in a minute. We're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Please check unchainedcrypto.com/bits and bips for more disclosures. Before we begin, let's take a minute to hear from our sponsors that make the show possible.
Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO memo. Carefully consider the extreme risks associated with crypto before investing.
All right. So let's get into this. If you've been living under a rock, you can't talk about what's going on in markets without talking about what's going on with US, Iran, and Israel. Iran and Israel obviously have been attacking each other for a couple weeks now. The U.S. just bombed nuclear sites in Iran. Earlier today, Iran fired a barrage of missile attacks at U.S. bases in the Middle East. Obviously, the number one impact here is oil, which we can talk about. I'll hear everyone's point of view. But Alex, let's turn to you to get your views and thoughts on how you're looking at trading this market. I saw you tweet this morning. It's come out that Iran basically warned Qatar and essentially the U.S. that they were going to send missiles at nearly empty bases beforehand. And I'll let you read your tweet or comment on your tweet real quick if you want before we get in.
Hey guys, to be honest, actually I've been on an extended vacation all month, and I came back to the screens for Iran and Israel. It's been very tradable and very volatile. The way I saw it and the way I still see it, and I think is like people still have time to react, is this is a very, very, very exact, almost exact replica of what happened with also Israel and Iran in 2024 in April. So the length of the extent of the conflict back then was, I think it was like 9 days, and this time was 12 days. More or less. And if you look at the chart, it's been very, very similar. Just the difference is who started it and who has had the last word. But if you recall, back then, it also ended with, in this case, was Israel having the last word and having basically a safe, face-saving last attack that it was highly telegraphed, and it was meant to produce minimal damage. And that's exactly what we had today at the end, with Iran attacking a U.S. base in Qatar, which was telegraphed, even announced directly to the U.S., announced to Qatar. The missiles were also intercepted. There was no damage. So it seems like a perfect replay, and thankfully there is no death, and also thankfully this allows markets in general, and crypto in particular, to basically catch back up. That's the way I'm thinking about it. What do you guys think?
Yeah, Anthony, what do you think? And briefly, before you comment, like, why don't you just, for those that don't know who you are and are living under a rock, why don't you say who you are?
You know, I spent obviously 36 years on Wall Street, 20 years as the founder and managing partner of Skybridge. Of course, I had an ill-fated stint in the first Trump administration and was fired from the comms directorship after 11 days. But I have a pretty good idea of what's going on, having read intelligence briefings before, and I'm not read into anything right now, though, full disclosure. But I would just say that I don't think a lot of damage was done. I think the response from the Iranians indicates that there was not a lot of damage done. I think the sites that we did bomb, they too were tipped off, and they moved a lot of the stuff out of those sites. Any Russian nuclear technician was moved out of those sites before those sites were bombed. So there's a flex going on right now. Some of it is to help Bibi Netanyahu domestically, and some of it is to give the president an opportunity to assert himself as well. But I can tell you that the markets are usually right. And if you look at the performance, just keying off of what Alex is saying, if you look at what's going on, there was uncertainty before the attack happened, the counterattack has happened, markets have rallied into those two things. I don't think we're going to get much more than that. This notion that there are terror cells in the U.S. that are going to demolish us and so forth. You guys probably know this, which is why you own Bitcoin. You live in a surveillance state. I can't speak for Madrid, but my guess is it's similar in Madrid. And they can turn on your phone, they can turn on your TV, they can turn on your baby's camera, and they can listen to everything you're doing, and they have a recordation of everything. And if you think Signal isn't compromised by the U.S. government, then you really don't understand how the shit works. So you can go to apps like Signal, go to apps like WhatsApp. It doesn't really matter. They have access to all of that information, and they also have access to your Telegram. And if you don't believe me, ask the French government, who detained the founder of Telegram for several weeks last summer. So now, having said everything I just said, that is good news in some ways if you're a law-abiding citizen, because they are tracking these terror cells. One last point, I don't mean to dominate the conversation, but one last point. You will find in the United States a lot of these terror cells self-liquidate. You say, okay, what does that mean? They show up in a jihad. They want to kill Americans. You give them a T-shirt. You give them an iPhone. You give them a girlfriend. You give them a social media website. You give them access to fast food like Chick-fil-A. When they self-liquidate, they no longer want to kill the people that they were assigned to kill. So a lot of that happens as well. So I don't see that as a huge risk.
Yeah, I'd agree that the panic was overdone for sure. I've been writing for a while, though, about one thing that worries me a lot about markets, and that's the complacency that nothing ever happens, and the complacency that this is all fine, and the massive shifts that we've been talking about on this show, and I know that, Anthony, you've been following, the massive shifts that are happening in the geopolitical back rooms. They are material for markets, and markets don't care. Normally, what does it take for markets to start to care? Something kinetic. So that explains the reaction this weekend, that explains the uncertainty on Sunday with Bitcoin all over the place, Bitcoin being the only global macro asset trading when all of this went down. And the confusion and relief, I think, today that, yeah, this is probably not going to go far from here. But again, that doesn't change the fact that things are moving. There's the NATO summit starting tomorrow. And for the past few years, the IP4, the Japan, South Korea, Australia, New Zealand, they have attended. They're not attending this time, none of them, not one. And this kind of big picture shifts is partly why we do what we do. And markets have to be short term, obviously. And I thank God every single day I'm not a trader. But the complacency is something that I've been worried about. And Anthony, I do want to hear your take, please, on what do you think comes next for the conflict in the Middle East, including Israel, Gaza, as well as Iran?
All right. Well, I mean, this is a little bit out there. It's not in the news, but I think that the Trump administration is trying to help Netanyahu. And one of the ways they help Netanyahu is by striking those facilities, which hopefully gives him more credibility at home as he's dealing with his own political entanglements. Because the Trump administration wants the situation, we'll call it a situation as a euphemism, in Gaza to end. I think most Western leaders, even if they support Israel, recognize the state and survivability of Israel, would like to put an end to what's going on in Gaza. And again, I am a supporter of Israel, travel to Israel. I grew up on Long Island. I've been to more bar mitzvahs than I've been to christenings. Okay, so I'm with the Jews. But you got to be very careful about your brand management in terms of the state of Israel, because there's an overreach going on in Gaza. And I think, weirdly, the attack on Iran will give Netanyahu a political opportunity to trim his sail in Gaza successfully. Because remember, he's got to please the hard right, stay in power. And I think they're more or less getting what they wanted. And so, weirdly, I think that this is going to help forge a road to peace that would have been harder to achieve, Noelle, had these strikes not taken place.
Yeah, I agree, especially if Hamas's funding is completely cut off. I mean, it was Qatar and Iran, the part of the agreement from what I hear, and you probably know more, what Trump got when he visited Qatar was an agreement to not do that anymore and kick out the leaders from the nice hotels they've been living in. And if Iran is not able to fund as much, then that does make peace in the region more likely.
Okay, but for viewers and listeners, I think it is important to know that the Qataris were given a green light by Netanyahu himself to fund Hamas, because there were water shortages, there was hospital and medical equipment shortages in the area, and they went to Netanyahu and said, "Do you want us to fund this stuff?" Now, unfortunately, a lot of those donations, if you want to call them that, got diverted into terrorist activity. So there's a plot line, there's a headline, and then there's a subtext of what's really going on in the region. So, there's been some mistakes. The biggest mistake, and this is not me blaming the victim, but this is just me explaining how rough the neighborhood is that the Israelis were not ready on that Sunday morning. But they are typically ready. I've been to Sderot, and if you look at the map, it's at the lower bottom edge of the what I would call the southern western border of Israel, right adjacent to the Gaza Strip. Now, that city gets hit with Acheson rocket fire almost every day. Most of the glass in the city is bulletproof. Lots of the facilities are hardened, and certain areas were not ready. That musical festival was unsecure. And of course, they haven't had time to go over that, but it is really like a 9/11, we got caught off guard incident for Israel. And, and I don't think the terrorists or their proxy sponsor, Iran, expected that level of damage on that day. They thought that they were going to kill 300 or 400 people, perhaps, cause an international incident, stall the Abraham Accords. I don't think they expected to catch the Israelis that far off guard and to have them go that deep into the country to do that much damage. So a lot of, remember, when you start a war, you cause a terrorist attack, a lot of things happen that you're not planning for that lead to other things that unfortunately can worsen outcomes. So I will say this about the Trump administration, because I try to be objective. They have said repeatedly over the weekend, okay, James is laughing because he doesn't think I'm objective because he knows I hate Trump, but I'm going to be objective about the facts, okay? I just think Trump is a moron, and I'm happy to talk about that as well. But objectively, they dropped the bombs, and they're sending a message of de-escalation, and I do like that.
Yeah, I would say the markets, obviously, Anthony, you pointed to the markets there. I mean, I look at oil and it really started rocketing a little higher in June, went crazy on June 13th. And it was more in preparation for how bad things could get. And I think after today, after those missile attacks where we know it was choreographed, a kind of last ditch thing you said. So oil went from $60 to start June, or 62-ish. It went all the way up over, 77, 78 at its peak. And now it's trading back around $67. And it's like the markets are like predicting the worst case outcome. And now they're basically saying, okay, I mean, the one thing we should ask about is like, do you guys think they're going to close the Strait of Hormuz? I mean, I feel like poly market odds were at 27% earlier today. I don't know exactly what they are right now, but like, do you think that's a realistic situation that's going to happen here at any point, or do you think that's kind of off the table now?
Short answer is no. They're sending 1.7 billion barrels a day to China. The Iranian economy needs that money. And they can't close the strait. I think they've had a political statement of their parliament giving them permission to close it. But again, that's posturing to help them internally in the internal politics. They're not going to close the strait.
Yeah, they got to look strong to their people, even if it's just sending 14 missiles. They alert them.
That's why they struck that base in Qatar.
Yeah. Alex, Noelle, do you disagree?
Yeah, no, I don't disagree, but I think it's the past now. We're talking about the past. I mean, it was interesting what Anthony was saying before, because it's about looking into the future beyond the immediate reaction in markets. But when we're talking about crude and the Strait of Hormuz, it's the past. That's the way I see it. But it did matter. I mean, like, I'm not a Middle Eastern expert at all, but I talked to trading houses who are, and the view from people who trade crude in size was basically there was a very real possibility of the Strait of Hormuz being shut down this time for the first time ever. So the view was last Friday, like exactly 10 days ago, was like, crude oil just spiked up to 72. And there is, if nothing happens, it's going to fall back down $5 to $6. And if they do close it, we going straight up to 100. So it made sense as a trade that in a way that reflects what happened in markets overall. It's if that gets closed, inflation goes to like the roofs, and the entire geopolitical landscape changes, and we're basically looking at a whole new world, at least for 3 weeks or X number of weeks, right?
The thing is also, it doesn't need to close to have an impact on the oil market. For sure, the price is going to come back down. Sure, it get a scare, but insurance is going to get more expensive simply because of the additional risk going through there. And we have seen, even without confirmation of a close, tankers turn around and choose to take a longer route. So it's not insignificant. But I do totally agree. It's not going to be the catastrophe that a closure would be. That would be declaring war on many of their neighbors, which just doesn't make sense. But the Strait of Hormuz is not entirely theirs.
Yeah, but at the same time, you could argue if you're in a position of absolute weakness and you have no leverage whatsoever, so it's a hyperbole, right? But if that's the case, you can turn around and look at the Strait of Hormuz and, hey, I shut it down and I changed balance of things. At least I force people into the negotiating table. Again, I think that's looking backwards. Hopefully I'm right, but I think it's backwards looking.
Yeah, I think what a lot of people get wrong is they view like markets as like a binary outcome, when really it's like discrete. Like there's a probabilistic situation here, and that's what everyone's pricing in. And it's funny, you see a lot of people actually pointing to poly market odds and various things and working that into their assumptions for predicting the future. Because when everyone's doing financial market predictions or trying to understand the price of something, they're trying to see what's the probable outcome of X or Y happening and multiplying that by what they think the future value would be. And that's how they're getting to the present value. And I feel like normies kind of miss that in many cases when I'm having these conversations. Last thing on this topic,
before you change quickly there,
go ahead.
That poly market contract had like the open interest was like 500,000. It was like really tiny. It's something we often forget when we're looking at poly markets.
Yeah, and markets can move very quickly. I mean, if you look, one of the big things that's being used right now, I keep seeing it all over the place, is like the odds of, I don't remember his name, but Cuomo versus the other guy, the
Oh yeah.
avowed socialist, like, and like you can
Yeah.
watch that and there's like massive spikes and you can just see that somebody buying long, Zohan versus whoever. And it goes to, but yeah, so the actual odds right now are down at 11% on Polymarket for closing the trade over blues.
Mandani, curious, Anthony, what do you think of Mandani and New York on that front?
Well, listen, I get the grievances. I just want to make sure people understand that. I get the grievances. There's a lot of people in the city that feel like the city is overpriced, and there's families that have been here forever. Their wages, Alex, are not rising to the pace of the inflation and the exogenous inflation in the city. And so this is a responsibility of good government to fix those problems, but do it with market forces. And I've said this from the beginning. If you create equal opportunity in a city like this, I'm not for equal outcomes. But if you create a platform of equal opportunity in a city like this, you'll calm people down. They'll once again feel aspirational. But many people in this city feel economically desperational. They did not feel that way under Mayor Bloomberg. And so, unfortunately, these types of policies that de Blasio and Mandami and these other people, AOC, represent, they are well-intended, but they have an ill effect on the people that they're trying to help. They worsen the problem. So he gets in, businesses will leave the city, taxes will go up, services will go down. There'll be a free-for-all in that city, and the conditions of that city, which has made that city great and a wonderful place, and where I've made my income and I've enjoyed a great life in that city, even though I live out on Long Island, will be worsened by him. Because I'm not going to say like what other people say on Wall Street, oh, Mandami sucks and we got to vote for Andrew Cuomo. I'll say that, but I'll say the underlying context. You have to fix the problems of the people that want to support him. Okay, Zohan's getting support from a group of people that feel aggrieved and they feel left out of the system. You ignore those people at your peril, because there will be a political leader that's a little older than him and a little bit more skilled. I predict he'll lose, by the way. But but it's not to say that an older, smarter, wiser version of him couldn't win if we don't fix these ills, Alex. And that's the thing I'm the most worried about.
Let's move on a bit here to talk about macro topics. Let's get into the Fed. We had a Fed rate meeting last week. We got some dot plot releases. Essentially, right now, the Fed is calling for 50 bips on average. It's actually pretty widely dispersed this year and definitely next year in the dot plot that we saw. But right now, the markets are basically pricing for 2 cuts by December. And then the market is also pricing for another 2 cuts by the middle of next year. The Fed doesn't think so. They're saying 1 cut by next year. I will say that Bloomberg's Fed rate strategist, Ira Jersey, who I sit next to, I was talking to him today and asking for his view. They're also in the camp of 2 cuts or 50 bits of cuts this year, though they think it might be just 1 50 bips cut later this year. And he thinks they're going to have to cut more into 2026. But right now, the markets don't justify any sort of cutting based on economic factors. So I'll go to you first, Noelle. Like, what are your thoughts on where the Fed is sitting? Do you think the Fed's rate cutting patterns even matters that much for markets? Where do you sit here on this situation?
Well, the Fed's dot plot is generally wrong. I mean, generally they get it wrong, what they're going to do. What I think is much more interesting than the FOMC outcome, the press conference, as well as the SEP, which frankly was sort of a nothing burger. What's much more interesting is the pivot we're seeing in some of the Fed officials' tone over the past few days. Started late last week with Waller saying that he thinks cuts now. And of course, our reaction is, oh, he wants the job, that he's auditioning for Powell's job. But then we had 2 more. We had Bowman come out, and this afternoon Goolsbee has also said they're talking now about cuts. Now, I'm not sure how much this is a pivot in the Fed's officials' tone, or it is a shift in reporting, because Goolsbee said, yes, I think cuts would be appropriate, and then in the small print, if there is no repercussions from the tariffs. And that's an if that is doing a lot of heavy lifting there. But it was interesting. It felt coordinated rather than suddenly a lot of people auditioning for Powell's job.
Anthony, how about you? What do you think we're headed on in a rate environment? Do you think they should cut? Where do you think they should go? And or do you think what do you think the impact is? Do you think it's more about the fiscal situation rather than the monetary situation?
Well, I think Noelle is right. They often get this stuff wrong because the Wall Street guys are saying 4 cuts last year, and the Fed said they were only going to cut once. The markets reacted to that, and then guess what happened? They ended up cutting all 4 times. They did it late in the year. And so, yeah, I'm not making it up. That's exactly what happened. So I think Noelle is on the right track. I don't think you're going to get 50 basis points worth of cuts this year. I think it's going to be closer to 100 because I would encourage everybody here to look at trueflation.com. And Trueflation is an aggregator that's taking cash register data from retail. It's taking service data. It's taking a whole host of different things, including energy and food and all the different things that you would expect. And it's real-time data that's going into Trueflation. And those inflation numbers are lower than the way the Fed is calibrating the number. And so I would tell you the reason why Noelle's right is that the Fed is using antiquated mechanisms to measure the inflation in the economy. And so real-time mechanisms, I think, are more accurate. And I think there's room for 100 basis points of cuts. But, when you're tweeting at the president, this is why, the president is tweeting at the Fed president, the chairman of the Federal Reserve. I think it's asinine. I don't think you should be tweeting at him. You're shoving him, and he's trying to help you and trying to help the flow of capital into the United States by having some level of political independence. And Trump shoving him is not helping the situation. It's probably, if anything, I think the rates could go down. And I think Trump has actually slowed that process with his nonsensical, asinine behavior.
Yeah, I mean, he's calling him a moron, saying he doesn't understand things. I mean, it might be like, if that was me, it might push me the other direction.
Not you. How about if it's Jerome Powell? Jerome Powell's giving him the bird right now.
Yeah.
You know that, and I know that.
Yeah. I mean, the other thing here that I like to think about is like his tenure's almost up, and he's probably worried about legacy. And like the long-term risks of potentially cutting and then causing a whole bunch of inflation to come back is something that he might be worrying about more than he should, I think. I mean, I'm obviously not a macro guy, but that's something that I think about. Like if he's really worried about his legacy and he keeps talking about inflation despite no signs of inflation whatsoever, obviously they're going to keep pointing to, tariffs potentially causing inflation. That's what he said multiple times. Yeah, I think that could be part of playing a role here too. But the one area I think for the most part, the financial conditions, you look at this, it doesn't look like we need to cut it. I mean, labor is getting a little bit soft. Inflation is not showing anything, but nothing really looks really bad. The only thing that looks bad in my mind is the housing market is completely out of whack. But last time they cut, mortgage rates weren't even affected by the rate cut. So like, I don't even know if cutting right now is actually going to help anything in the housing market as far as rates go or mortgage rates. But that's what I'm thinking about, I guess. Like the one area where I'm like, they could really use lower rates to like equalize out the housing markets. There's such a huge divergence in what people bought in 2020 before the Fed cut rates and before they started raising rates. You look at rents versus buying and mortgage payments on those people, it's literally insane. You're looking at somebody worried about 25% of their net paycheck going to housing versus other people who have bought a house recently in the 60% range. But again, I don't even know if cutting rates is actually going to help there.
So let me ask you a question, James. What should the real rate of return be in the United States? So if the long bond is 4.8%, what should the implied real rate net of inflation be? Go.
I have no idea. I don't want to pretend to be like.
Okay.
Yeah.
Alex, do you have a view?
Do
you have a view on that?
What should be or what it is?
Well, let me rephrase.
You're saying because right now the real rate is.
You're the Fed chair, and you're looking at inflation, and you now have to set rates in the country, and you're recognizing the bond market is also involved with this, and there's going to be a real rate above the inflation rate. What should that be if you're the Fed chair?
Well, I don't think the Fed manages rates that way. They're not looking at the real rate of return. They're going after trying to maintain their dual mandate, which is independent from rates of return. Like usually stocks, we have say stocks have a 10% give or take on average, including dividends. Bonds, I would say, like 1 or 2% above, ideally, the inflation. But I don't see why why this matters for the Fed, to be honest.
Alex is addressing the question I'm trying to get to. So Alex is saying 1 to 2% above inflation. That seems to be the historical number that works the best for the economy. So if you go to Truflation is at 2.14% right now. Okay, so that would put the long bond, let's split the difference and say it's 1.5. Okay, that would put the long bond at 390 right now, down from 480. Okay, so let's take what Alex said, because I think that is an appropriate number. And I'm just saying you have room. I'm just trying to provide evidence to you guys that if you're sitting in the Fed meeting and you're one of the board of governors, you're one of the presidents of the other Fed, and you're looking at the numbers, there's 50 to 100 basis points worth of cutting that would potentially help the housing market, would potentially help the capital markets. And, I think he should do that. And he's not doing it. Some of the reasons not doing it is because of Trump.
True, but there's also the risk of tariff-triggered inflation. Right now, we haven't seen that, but July 9th is just around the corner, and we have no idea what the tariff rates are going to be, and we still don't know.
It's a really good point, which is why he more or less said exactly what you're saying last week in his press conference. How can I move? Because if imbecile goes from July 9th and extends it to November 9th, then, maybe then I can cut. But if he's not going to do that,
And what is interesting is that he has gone from being data dependent to forward looking, which is something many of us have been arguing he should have been doing all along. The Fed shouldn't be relying on the rearview mirror as much as it has been. And again, central bankers are by nature cautious people. If you're not, you probably don't apply for a job in a central bank to start with. But going back to your question as to what the rates should be, I have heard Powell talk on many occasions, and I've read other Fed officials' writings on this about the neutral rate. They seem to, in my opinion anyway, focus more on the difference between the actual rate and the neutral rate. And they are concerned the neutral rate has been climbing, which is another reason for caution. No one ever knows what the neutral rate is. It sort of is the equilibrium rate. And what equilibrium even means these days, I don't think anybody has any idea. But there are many variables in here, and the demographics and the savings and everything do all contribute to the change in the neutral rate. And so they're going to wait until I think they absolutely have to do something. I'm more of the camp that, I would love to see them cut, but I think a caution is going to be the main tone going forward. However, the change from 3 Fed officials over the past few days is making me rethink that.
I want to add, I agree exactly what you're saying right now, Noelle. And for me, the point is that they don't really know. Because they don't really know exactly what Trump will do on, as Anthony was saying, on what is it, the 9th? I think it's the 9th or the 8th. Say the 9th. The other thing is that inflation, the pass-through is not yet completed. Inflation could truly spike very fast in the next 2 months, and we don't really know that because we don't know exactly what's being passed through. And it happens with tariffs that at the beginning, the importers are absorbing most of the price effect, and with the passing of time, and there's a lot of data on this, with the passing of time, the pass-through increase to the consumers increases dramatically. I don't have the data in front of me, but could pull it up. So I to be honest, it's truflation, and inflation right now is being quite muted, but it makes sense to wait. And I don't think we're going to see a cut in July. Three people are not enough. The last FOMC was around the corner, and Powell was quite adamant that he wanted to see more data.
Okay, could I ask a question to everybody, if you guys don't mind? I know James is running the program, but is Trump going to chicken out again on July 8th or 9th? Okay,
I think yes.
Okay, so I'm a yes. So now we got 2 yeses on this program. It's like Hollywood Squares. Okay, James.
I'm also a yes. Yeah, he's gonna chicken out.
Alex, go ahead. What's he gonna do?
He's not gonna chicken out. He's gonna extend without chickening out. No tacos.
Didn't extend
He'll
it.
find a way to extend it without causing chaos, I think.
Well, he just did something people didn't expect him to do.
Yes.
Right? He dropped a few bombs in Iran, and I think it's going to give him some space to extend the moratorium on the tariffs, and I think it's going to give him some space to cut some deals. And I think he's learning, and his team is learning. Mike Froman, who was USTR, went to law school with me, USTR for Obama. He said one trade deal with one country takes 18 months. You're not going to do 90 trade deals in 90 days. It's just not going to happen. And so
there's 15 days left. I've been keeping track. There's 15 days left of that 90-day window in which we were going to get 90. And we've had half a one from the UK.
Yeah, the market's telling you that Alex can call it whatever he wants. God bless you, Alex. Okay, you tell me what the name of it is. He's not going to chicken out, but chicken out. So maybe that's the name of it. That the market's telling you that he's going to do that.
Yeah, I mean, the question is, what was the ultimate goal of this? Was his real goal to onshore all this stuff and make it so it's so prohibitively expensive? Or was it to generate income and try to at least bring up some, manufacturing here in the US? I feel like when you were hearing about these tariffs, you were hearing like 20 different reasons of why they were doing this and what the goal was. And then they're like pausing them, moving them along. And like, I guess you need to know what his real goal is here, his end goal. And maybe it was just he set the goalpost so far out that if he comes back in and he just says 10% on everyone, then all of a sudden everyone's like, okay, I guess that's not so bad. But really, like if he had just come out and said 10%, I mean, this is something he does all the time in his deals. He's literally written about it and said, we're doing 10% tariff across the board for everyone. People would have been up in arms. But now it's kind of like, okay, I guess 10% might not be so bad. So you have to figure out what his real goal is. And I think it determines by like who in his faction you're talking to, what their ultimate goal was.
Actually, I have a question for Anthony about that. I mean, you obviously know the people in question here. Does he have a goal, or is he just letting people fight it out in the Oval?
So I think he has a goal. I mean, I remember I got fired after 11 days, Noelle, but I worked with him for a year. I was on the campaign flame for him with a year. Remember, I was it's not like I met Trump on July 21st and then got fired 11 days later. I worked for the guy and provided media, worked on the executive transition team, sat with him, called his cell phone regularly, talked to him. He has a point of view that is no longer economically sound policy. His point of view is that we've had a 3 or 4 decade trade agreement imbalance with the rest of the world, a result of which America has been ripped off. I can prove to everybody, we don't have enough time for this, that category is not true. Moreover, the instruments that he wants to use will hurt the U.S. economy. I'll just give one vivid example. The tariffs are going to hurt Boeing. 60% of the parts that Boeing needs to put together that airplane are coming from overseas. Think of all the flat screens that are on these airplanes. We're not making those, and we're never going back to making those. If you guys think we're going to do that, you're smoking crack on this show. Okay, so what he could do is he could have gone to the Europeans and he could have said, listen, we need to create a North Atlantic free trade agreement. I fixed Canada and Mexico with USMCA, and now I want to bring you guys into it. The total population is about 800 million. When I'm done doing that, which is going to take 6 to 8 months, I'm then going to turn my attention to China, because I've got 800 million people in the free world that I'm representing, and China is disavowing their trade agreements. They promise certain measures of grain. They promise certain measures of different agricultural products. The minute Trump left office, they stopped living up to that agreement during the Biden administration. Trump is right about that. You have to give him his due for what he's right about. But by shooting our allies and shooting our adversaries, did I piss off Kruger or what? Probably, right?
No,
Alex, did I go off with the commentary or no?
No, I turned my VPN off, so because I was losing signal.
Oh, okay. All right. I was getting sensitive. But all he had to do was go in that direction, and he would be a hero. He'd be a hero to Wall Street. He'd be a hero to the working class. But when you're shooting everybody in a 360-degree angle, and you're creating adversaries out of our allies at the time that you're trying to, get our adversaries, our economic adversaries, into economic compliance with agreements, and so, yeah, no, but you know what? They're all ass kissers in that White House now. No one's going to pick up the phone and say, hey, you're acting batshit crazy. Calm yourself down. I knew Elon was in trouble 3 or 4 weeks before he hit the eject seat, because he said that Peter Navarro was as dumb as a bag of rocks. And then he said, the secondary truth is, I just want to apologize to the bag of rocks for the comparison. I didn't mean to insult the bag of rocks, but look at me. Trump and Navarro are like this on trade. If you're calling Navarro, think about it, guys. You guys have done mathematical derivatives. If you're calling Navarro an imbecile, and Trump has the exact same ideas as Navarro, that makes him also an imbecile. Okay, and then, that was it. Then Elon exploded and said, okay, I got to get the hell out of here. He lasted 12 Scaramucci's. 11.8. But we're generous when we grade by these Scaramucci, so we rounded up to 12. Okay?
Yeah. That was him exploding out of there was the most predictable thing in the world. Everyone knew it was going to happen. It was just a question of how long it was going to take before they butted heads over something. And yeah, I wish I could.
How theatrical it would end up being.
Yeah, which was electric. I mean, we talked about it on the show already when it happened, but that blow up was fun to watch, man. Sad to watch, but also fun to watch.
There, though.
Yeah.
I felt like JD Vance got involved, and I felt like Elon was ready to go full jihad. Like JD Vance got in there and said, Elon, calm down.
In a way, I think Elon may have sacrificed himself for the benefit of everybody, because he was part of the trigger that helped Trump's pivot away from the initial path that they were taking, the intransigent high tariffs path that they set up on the 8th, right? Like the Navarro, what's his name? Nutlik. I called him Nutlik.
Mirin?
Butlick? Howard Butlick?
Lutnick, Nutlik, yeah. It's not the Navarro path versus the Besant path. Okay. So, yeah.
I'm just giving you a couple of nicknames we call him on Wall Street. But go ahead. Sorry.
Which Butlick?
Yeah, Butlick, Nutlick.
Yeah, makes sense. Yeah.
Howard Butlick. I mean, I think he lost his mind, the guy. I mean, when you watch him on TV, you're like wincing.
If you look at like when some of those other people we mentioned are on TV talking about what the administration is doing. I mean, I forget who, Renaissance Capital did this. And you look at when Besant is on TV, it's like Besant talks, markets go up. Half these other people we're talking about go on, markets just tank because they don't like the way they're talking about anything to do with economics and finance.
Sir Anthony, were you drinking there? Kind of say what?
No, I wish
it's
lemonade, but it's just lemonade. My wife brought it.
Yeah, no, it looked like a drink from Latin America with the little condensed milk with the pipe that you had. So I was curious. It's not from there. So
environmentalist. This is a glass straw. See, I'm not allowed.
Yeah.
There's no plastic or paper straws in the house.
Yeah,
she's a good woman. All right. Before we move on to stable coins and ETFs, we got to do it quick because we got a hard stop around 5:30. Let's hear from our sponsors who make this show possible.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
Let's talk about stablecoins. Obviously, stablecoin bill is one of the hottest topics as far as crypto is concerned. We're also looking at a potential market structure bill, but let's stick with stablecoins because doesn't look like the market structure bill is actually going to get done. We also had the Circle IPO, which we have talked about on here, but the valuation on Circle stock is absolutely insane as far as I'm concerned. But what my view doesn't really matter, I guess. I'm curious, Anthony, what is your view on stablecoins, the stablecoin bill, and I guess the Circle IPO as well? Just feel free to rant on what your thoughts are on this topic.
Well, first of all, at full disclosure, I'm an investor in Circle. I bought into it over a course of several private rounds. And so, I'm a fan of their business. I think,
First of all, congratulations. It's sitting
thank
pretty
you.
right now.
I think the market capitalization is telling you that Circle's trading like a meme stock at this point, and there's meme stock activity in Circle. If you wanted to build an institutional case for Circle, you'd say that a lot of these institutions are still gun shy of Bitcoin, the way BlackRock was gun shy of Bitcoin 4 years ago, where they made their $400 million investment in Circle. And then Larry Fink told me in the lobby at the Four Seasons Hotel in Abu Dhabi that he hated Bitcoin. And that was November of 2021. Fast forward to January of 2024, he's launching the most successful ETF, most successful Bitcoin ETF. It's got $70+ billion in it today. So people can change their mind, but I think most of the people that started this buying spree were institutions that were like, I got to get long something in crypto. And this seems like it's an okay thing to get long because it's a regulated stable coin. But just two more sentences quickly. Stable coins are here to stay. I'm not super in love with the legislation. If you actually really read the legislation, it's a top line win. But the lobbyists for the American Banking Association wrote a lot of that legislation. And it's going to curb and make it a little bit difficult to get the true blockchain, trustless, third-party transfers going that we would all like. So, but it's way better than we would have been had Joe Biden or Kamala Harris been president.
Yeah, I think that's a very fair point. I'll just throw some numbers out here. I mean, Circle right now is trading at $263 a share, just shy of $60 billion in market cap. Compare that to Coinbase, it's trading at like $78 billion in market cap. So they're not that far away from parity. I mean, it is $18 billion, but it's crazy that the run that Circle has been on. I think to Anthony's point, it's more so from my point of view is like, one, a lot of people wanted to get exposure to stablecoins after seeing what's going on. They're hearing all about Tether. I think people just want to get long this thing. And now it's just a momentum meme stockiness right now, but we'll see where this shakes out long term. I personally wouldn't be one putting my money in to short this thing, because when stuff is moving like this, you can get blown up. Noelle, what are your thoughts?
I'm curious as to why they're so eager to go long anything that would have exposure to stablecoin growth. The Genius Act is going to be material. There are a lot of corporates using stablecoins, but there's also just a ton of competition coming out. One thing about making it legal to issue stablecoins is there's going to be a lot more stablecoin issuers. We're already seeing many people come out of the woodwork promising all sorts of, old projects are being reawakened, new projects are being ignited, and the banks are starting to sniff around this, and they already have the distributions. In other words, Circle's monopoly can only get weakened from here. It's certainly not going to get stronger. So the exposure to the business of stablecoins is exposure to a business whose margins are going to be getting compressed.
On Circle, I mean, I've been seeing people talk about putting puts on Circle. Long inputs on Circle, like almost every single day I get into the chats for the last 10 days, like every single chat room talking about buying puts. And it's too soon, I think. I mean, maybe like today had a big move, but it's too soon, because to think about Circle, I think is very similar to the infamous Solana low float high FDB. So Circle has ultra tight free float. It's about 15% of the A shares. And it's very little is going to hit the market. I mean, there's really nothing hitting the market until it's a 180-day gate. So there is no liquidity for quite a while. So, I mean, I think it's highly overvalued right now on fundamentals, but fundamentals don't matter when you have such small float,
Yeah, I mean, the numbers right now is 19 to 20%, 18 to 19% of the float is shorted right now, as of the most recent data that I have on the terminal.
One thing to pull on that Anthony said when he was talking about the the wording of the Genius Act is actually, there are many losses that the crypto community is taking there. And one that surprised me was something that prohibits any non-financial company from issuing stable coins. This means Meta's going to have a hard time doing so. Walmart and Amazon were reportedly looking into issuing stable coins. They're going to have a hard time doing so because the wording was changed at the last minute to prevent a tech company from becoming like a financial company, essentially becoming a bank, because it's hard for a bank to become a tech company. And they thought this was slightly unfair. And then, to show you where I'm going with this, today, or was it yesterday, time blurs, I think it was today, we read that X, formerly Twitter, is going to be launching trading and payment services within the app sometime in the remainder of this year. They haven't specified if they'll be using a blockchain-based payments or a token of any sort, but it would kind of make sense. And if so, are they going to be using another or existing stablecoin, or are they going to be trying to issue their own by setting up a financial subsidiary?
It's funny. I guess, Anthony, before I make my comments, I'm curious if you could talk a little bit more about, you said you didn't love everything in here, and Noelle just pointed out one thing she didn't like. I honestly kind of like this. It kind of makes sense to me to prohibit the people that can launch these things, at least domestically. I don't know if you want an Amazon and a Walmart, completely controlling everything in the ecosystem. It'll just help them become more centralized and dominant in their market space than they already are. But I guess, Anthony, what are some of the things in this bill that really jump out at you that you're just not a fan of? Is one of them the fact that they can't pay interest?
Well, isn't that the big one?
Yeah, that's the one for me.
So if they could pay interest, you're putting them in direct competition with the banks, and you're giving the client a 100% match, non-fractional banking. Right. So just think about if I came to you as your financial advisor, I said, James, you could earn this amount of interest and every dollar's backed 100%, but here's the spread. They're lending here, they're giving you a yield here, and they're getting yield there, and they're capturing a spread, and your net, but each dollar is 100% backed. Or we can go into the fractional banking system, which has a crack up every 15 years and needs the feds to bail them out. Which one would you choose? So
Obviously
there,
the first.
Yeah, right. So right there, you've limited the competition. Right there, you've limited the ability for people to make, the incremental choice to move into the stable coins. Some cynical people say, oh, that's great for stable coins because they can capture all the yield. Not great for stable coins because they want to grow that business, and they eventually want to eliminate the fees associated with the banking. So that's really the number one thing for me. There's other incidental things. I apologize, we only have 3 minutes left, but I just say to somebody, go to ChatGPT and say, what parts of the stablecoin legislation do you believe was written by the American Banking Association? And it'll spit out a whole summary of how the American Banking Association got themselves in there to hurt the bill.
Yeah, I think I agree actually 100% with everything you said, but I also think that the one that will ultimately change at some point down the line, and also that people are going to find out ways to pay interest. Right, you can deposit USDC at Coinbase right now and earn 3 point whatever % as though it's a banking account. They're going to find out ways. Austin Campbell did this great analogy on a podcast I was listening to. And he basically said it's like money, like you squeeze on one end, the balloon's going to fill up somewhere else, and they're going to figure out a way to use that money to bring on more users and pay them back. So I don't know necessarily that it's going to be completely a killer, but there are parts of this bill that have the banking lobby written all over it. And even David Sachs was on the All In podcast this weekend, and they asked him why that was in the bill. And he there was no stepping around the issue. He blatantly said, this is the banking lobby that came in and put this in there, which I thought was pretty blunt and just completely true of what's going on.
I applaud David for saying the truth. And so if you open the light in the kitchen and the cockroaches are running around, if it's better to identify the cockroaches, you have a greater likelihood of removing them from the kitchen than pretending they're not there. Guys, I have to hop, but I want to thank you guys and greatly appreciate being on. And Alex, you'll have to tell me what drink that is in Latin America. I'll have that.
Yeah.
Are you guys?
Thanks for joining us, Anthony.
Called
Great.
Tereré. Yeah. Great to have you, Anthony.
Great to see you, Anthony.
Fantastic.
James, thank you for the invite.
Can I add something to the interest-bearing stablecoins thing? Totally agree with you. They can do so by paying marketing rewards, and it'd be very difficult to ban marketing rewards because that would also affect banks giving you toasters and things like that. So they probably can, but there's also another way, and we've already seen a sample of what this could look like with the BIDL token, for instance. You just convert into a tokenized money market fund at the click of a button. The thing is, stablecoins were created to move. They weren't created to sit in an account. And so if you've got the stablecoins moving because they're not earning interest, and then when they don't need to move, they can be earning interest by converting automatically into a tokenized money market fund. And that sort of solves the problem in an elegant way, in that it does make sure that stable coins move. Now, this is obviously very US centric, because if you're in Kinshasa or something like that, you kind of just want stable coins because they're dollars, and it would be nice to earn interest, but whatever. But the point is, there are ways around it, and I don't see it as being the big. It's a stupid rule, but I don't see it as being the big negative, because technology will find a way around it.
Yeah, I agree 100%. They'll figure out a way around this.
The big negative is limiting who can issue. I agree with you, James, in that it would kind of be messy if Meta is issuing a stablecoin, given what they know about us. But it would be kind of also convenient maybe for Walmart to have a stablecoin that their customers trust and that can give them rewards as well, because we forget that stablecoins are programmable tokens. And while they are a dollar, and a dollar, you can debate what they actually are, but this is a segue into a new world of programmable rewards tied into your purchases much more directly. We haven't really even started to explore that yet.
Yeah, I just worried that we go back to like a pseudo wildcard banking situation. But I mean, we might be heading there anyway, so who knows? All right, I'm going to share my screen real quick. So this is our image for the ETFs, the assets that we think are going to get ETFs this year for the most part. This last week on Friday, we officially upped our odds to 95% and 90% for many different things. Basically, Litecoin, Solana, XRP, Dogecoin, Cardano, Polkadot, HBAR, and Avalanche are all at 90% or higher. The predominant reason for that is we think it sounds like the SEC is going to try to come up with some sort of framework, which is what I've been saying all along. They're going to try to figure out a way that basically, you know, what things you need to hit, whether that's the market cap needs to be a certain size, the liquidity needs to be at a certain level. I think if it has a CFTC regulated futures, it's automatically probably going to get a spot at some point, maybe after 6 months or a year of futures trading, or some level of open interest, or some level of regular trading volume in those futures. So I think all of those things could be used to be like, okay, these sorts of tokens are going to be allowed to be an ETF, assuming that we agree that they're a commodity. And the last thing I would be worried about potentially is like the low float, high FDV situation, where things that's been a huge issue with crypto in general. So that kind of might hurt SUI a little bit. So that's why our odds are a little lower. They also don't have a futures contract, so we're not sure what this framework looks like. But I would be shocked if just the fact of having a CFTC regulated futures product, in this case, some of them have CME, like Solana and XRP. Obviously, Bitcoin and Ethereum also have a CME futures contract. But the rest of these all have futures contracts that I have in that column on CFTC regulated futures on Coinbase. So if you have a futures contract, you can launch a derivatives ETF. You basically have to be able to launch a spot ETF after the precedent that the Grayscale lawsuit and Grayscale case determined. Basically, if you have a derivatives futures product, you can't then say a spot product can't list because it doesn't meet other criteria. So that's why we think all of these things are going to launch. We can get into like what we think the framework's going to look like. I don't know if you guys have any questions or thoughts.
I'll come in with a question, James, about the ETFs. So do you think Coinbase would be enough? I remember back in the scary Gensler days, it had to be a regulated derivatives platform, and that was CME. Is Coinbase derivatives regulated enough yet?
Yes, these are CFTC regulated futures contracts. So all of them, they're all on there. Cool. So they have their own derivatives business that's CFTC regulated and registered. So it should be enough. And also the other thing, I didn't even mention another one that I'm thinking about. Basically, the spot product is traded of some level of size or demand and volume on a US regulated institution. that where like you can go think, I'm thinking like Coinbase, Gemini, Kraken, crypto.com, OKX, you know, you name it. Like if it's trading there with some sort of volume, I think that would also be enough to get an ETF potentially. So like if you have some token that's only traded on Binance or some South Korean exchange, I don't think you're going to get US ETF listed. Maybe they won't even put that into the framework, but that would be my guess. So I think within the next couple months, we're going to get a framework around all of this stuff that the SEC is going to try to, like, I don't know if it'll be public decision making where they're going to go back and forth and we can see the comments from the SEC and from the issuers trying to launch these things. But I think there's going to be some sort of back and forth. They'll figure it out. And these things are all going to launch this year. So we're going to see a wave of them. The question is just how much demand is there going to be?
Yeah, I was going to ask you, what kind of demand do you expect? Because we're not really seeing BlackRock, for instance, say, hey, we've got a ton of institutional clients asking about SUI ETF. So what kind of demand do you think we'll get?
It depends. I mean, from what I'm seeing, Solana and XRP could get some demand. I mean, funny enough, we have derivative Solana and XRP ETFs, and the XRP ETFs have more volume and more trading and more assets than the Solana ones right now, which I'm not going to lie, surprised me a little bit. So there might be some demand there, but at the end of the day, I think it's kind of the same thing as what happened when I was talking about the Ethereum ETF launches. Like we were very bearish on the demand and we weren't bearish enough. I mean, they've had a tremendous success since Trump's election. It's still vastly underestimated our expectations versus the Bitcoin ETFs. So I think that it's going to be even worse for a lot of these. The one exception to that, I think, is the basket and index products. I think there's going to be a lot of people that are going to be looking at the space and like they're not going to necessarily go out and buy, you know, an Avalanche ETF, but they might buy an index product that has a little bit of exposure to Avalanche. So I think the demand on that side of things, the index side of things, particularly for the advisor world, might go there. But these other things are going to be more trading vehicles. I mean, they could get hundreds of millions of dollars in assets, but I don't think they're going to be anywhere near the, you know, $130 billion behemoth that is Bitcoin ETFs right now.
Interesting. And do you see the equities, because Circle went really well, there will be many other crypto related equities, I imagine, coming to market because there, do you see them detracting at all for potential ETF demand?
Yeah, potentially. I think for sure. Look, you said it. Just look at what Circle's doing. I mean, we've heard Gemini is filed to go IPO. We've heard about Kraken potentially IPOing. I mean, I feel like I hear a different name in the crypto sphere trying to IPO at some point in the next year or so. So that definitely attracts eyeballs. But I think if you're a long-term investor, you're going to want, one, you might invest in, you know, one of those crypto equities or a thematic equity ETF that invests in any sort of asset that fits with the crypto and blockchain, you know, ecosystem. But you might also want spot exposure. I mean, we had thematic crypto equity ETFs for years before we had even Bitcoin futures ETFs. And when you get a spot product, that's where a lot of money goes because people just want the real thing. So sure, it'll take away some demand, and but there are some people who are interested in equities that aren't necessarily interested in spot and vice versa.
It's a big change from when Coinbase went public. Most of our listeners probably remember that it listed on, I think, the absolute top of the market, and things went down from there. That's a very different environment to the Circle listing.
Yeah, completely different. I mean, are we even at the Coinbase IPO yet? What it went at?
I think it's close, but not quite there yet. From what I checked the other day, it wasn't.
Yeah, so crazy. Any final thoughts, Noelle, before I finish up?
No, just wish everyone, you know, be careful out there. It's going to be an interesting week. Things are changing fast, and keep an eye on the geopolitics because my take is they matter a lot more than the market is giving them credit for.
Yeah, I find that when I talk to people, there's like this, you know, everyone likes to attack the perma bears that are always talking about things that are worrying, and they're like, just buy and hold and go long and all these things. But there are people alternatively that are like the exact opposite, where they're perma bulls, which is arguably a better thing to be, but also they just discount any sort of risk as though it shouldn't be something that people should take into account when you're looking at risk assets. Like if they did shut down the Strait of Hormuz, like it would have been a huge deal. It's just you have to decide what are the odds of that happening. And again, it's a probabilistic outcome, which I feel like that when I look at Twitter, I see a lot of people that are just like perpetually bullish on risk assets and just keep buying, and everything's a dip buying opportunity, which I guess is true in a long enough time frame. But like they also kind of disparage people who are talking about the risk, which kind of bothers me as well.
Especially investing is about risk. I mean, that's really what it is. It's managing risk, and you take your profile and then you make your allocations accordingly. And geopolitics is not all negative. Yes, it's changing, but not necessarily. Okay, there maybe some things will be worse when the dust settles, but maybe some things will be better. So it's okay to focus on the geopolitical shifts and position accordingly without being a perma bear. It's better to be optimistic for mental health, if nothing else.
Yeah, agreed. 100% agreed. All right. Thanks for joining us for this episode of Bits and Bips. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone.